Welcome to episode 1 of our podcast, Confessions of a Property Investor. I'm Catherine Andrews, Director of Investments.
And I'm Michelle White, Director of Qualifications.
And today we're going to be discussing the reality of bank interest rates. Michelle, you are essentially the first point of contact that clients meet. So I guess you probably deal with the most questions out of all of us. Do you want to tell us what sort of questions the clients ask you?
The biggest fear, I'd say, and the biggest step forward that they come up with is around how it's going to impact them. So whether that's going to be cash flow, whether it is how the interest rates are going to continue to increase or decrease, and not really understanding relativity. If you have a look at where the interest rates are at the moment, we've become accustomed to really low rates in recent years, but that's not the reality of interest rates over the last, 50 years.
And that's, I think, something that the media probably makes a little bit worse. And the fact that people, you're right, have become accustomed to a certain way of living. In relation to the reality of the interest rates, having a look at trends dating back to 1992, it seems that Australian money is still pretty cheap. I mean, obviously not as cheap as what it was post-COVID, but it's sitting at, 7%, give or take at the moment. We're looking at 10 years ago, it was sitting at, 8 or 9%, and 10 years before that it was at 12%. Yeah. So when clients do come forward with these sort of fears, do you find when you give them the reality that they understand it, or they are still in that they've been accustomed or, I guess, swept up in that false propaganda?
It's really difficult to break that false perception. Yeah. Really difficult. Until it's outlined in front of them with the mathematics, with those figures in front of them, literally slapping them in the face. It's really hard to actually see past it.
Yeah, I know. And I even find that after they've spoken to you and you've given them all these facts, they actually come into the office and ask the same questions. So I guess we're here to sort of say to everyone today that the reality of the interest rates are that money is still cheap in Australia. I guess it's something that our lifestyles essentially have changed, where every child now has an iPad and one of those iWatches and brand new sneakers and a new bike every Christmas. I mean, I know when I was growing up, we didn't have that. And interest rates when my parents were buying homes back in the 80s were at 12, 16%. And people say, well, how homes were cheaper then? But hang on a minute. So were the salaries. They were a lot lower.
Absolutely.
So when you look at the balance of it, it's exactly the same. It's just people used to eat dinner out once a week. Back then, now it's every second night. Holidays have become more extravagant. So the cost of living and lifestyle expectancy, I think, has gotten, pretty intense.
Absolutely.
Especially over the last 20 years.
Absolutely.
What you wear, what sort of car you drive. When I was in high school, we were all driving around in, Ford Cortinas or, Holden Commodores. And that was the way. But I think the humility has gone from a lot of Australians, and it's about that status, which that's why the interest rates, I guess, are affecting them the way they are.
Definitely. And when you actually have a look at where the interest rates sit and how they correlate to how property is increasing in value, these rates are not hindering our growth whatsoever.
Absolutely not.
Within the first couple of months of rate rises, absolutely, everyone went into that fear factor mode and took a step back. But as soon as that had passed, property is still increasing drastically. So these interest rates, although it might scare them because they're a little bit higher than what they used to the last couple of years, it's not affecting the success of property investment portfolios.
We got spoilt.
Yep.
Australia, you got spoilt. Okay, after COVID, everyone felt bad because of COVID. Let's drop the rates down to 2%. The reality is they don't belong at 2%. Okay? And Australia's in a lot of debt, but that's a whole different conversation that I'm not going to bring up during this podcast. So why don't we talk a little bit, Michelle, about the precautions we put in place to protect our investors from any interest rate hikes. And I think that's something that Australians need to understand, that we forecast interest rate rises over the next couple of years, and we put that into their strategy to give, I guess, our potential investors and current investors a true indication of what it's going to cost them throughout their journey. Did you want to sort of touch on that a little bit?
Absolutely. I mean, as much as nobody has a crystal ball, what we can do is take that worst case scenario, look at things, and we can assess where a client's going to sit at the moment with current interest rates, and hey, what happens if they do increase further, and what impact is that going to have on the client? Whether that be putting in a little bit more, or how that's going to affect them from a tax deductible point of view. If they know and they're equipped with that knowledge before they have to commit to actually purchasing that property, they're going to know where they sit.
Exactly.
And knowledge removes fear.
Exactly.
So if we can plan with them and give them all of that information, they have the tools they need to be able to make the decisions to better their future.
That's right. So in reality, I can conclude very comfortably that interest rates going up isn't necessarily a bad thing. It does create somewhat a buyer's market, and the property markets is something we're going to touch on in future episodes, but it is a buyer's market, and it's the time where if you can buy, you buy.
You definitely buy now.
Yeah, absolutely. The confession of today is that it's actually okay to purchase property in any interest rate cycle. It really just truly depends on the purchaser and what they're willing to sacrifice in their day-to-day life for this short-lived cycle to go through. So I believe that it's just an excuse when people use interest rates as a problem, and that is a confession from us that I think it's just an excuse that I don't want to give up my pub and beer on a Friday to set up a property portfolio for my family.
Couldn't have said it better myself.
Yeah. So, well, thank you all for joining us for episode 1. Please, we look forward to you joining us again for episode 2, property cycles, the reality of those and how they work. Thanks a lot.
See you for the next confession.
See ya.